So you have rent coming in. What happens to the surrounding land? It always increases in value, right? If there's renters and there's income, it's going to attract other businesses. Well, in oil and gas, it's the same way. You don't drill a well where there's only one pocket of oil. You drill where there's offsetting pockets surrounding.
Welcome to the Cash Flow Chronicles. I'm your host, Johnny Catani, and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Welcome to a special edition of the Cash Flow Chronicles podcast. I'm your host, Johnny Catani, and I am joined today by a very special guest, Eric Rice. Eric is the Chief Growth Officer at King Operating Corporation, started his business career in Chicago in wealth management for high net worth clients before spending almost 2 decades building his own businesses. Along the way, he worked with founders across multiple sectors to create profitable, enduring enterprises, demonstrating a keen eye for the nuances of markets and corresponding growth opportunities. His real-world market experience has made him a sought-after partner for entrepreneurs and investors around the globe. He currently lives in North Dallas with his wife and 2 children, where he runs his own part-time ministry and coaches baseball in his free time. Eric, welcome to the show.
Thank you for having me. I appreciate it.
We're very grateful to have you and very excited to dive into this. Like I was talking offline, I've had my head buried in this industry for about 3 months now. And like anything else new, the more you learn, the more you realize you don't know. So we're grateful to have you. So I guess first tell us, what it is you do, and what's kind of led you to where you're at now.
Oh, gee, well, that's a whole different story. What's led me here? I'm traditionally a technology entrepreneur. So my last business was a public company, and I dealt in quantum biology. So I took about 14 months of my own personal time after leaving the company. I moved to Texas, and I spent a lot of time doing freedom activities, I guess we'll call it, working on free speech, understanding the markets, the corruptions in the markets. Started a podcast, did a bunch of other stuff here. Just really kind of serving God, serving the country. And it came down to time to get a job. And when I looked around, I said, what sector do I want to go into? Quantum biology is very small, and I'm in Texas. And I looked at the oil industry and what they were doing. And of course, I want to support American energy and American oil from American soil. So I decided to look into it. And I interviewed with a bunch of oil and gas companies for this type of role. And King was the only one that really fit my fancy because of the investment opportunity for people. So now I spend my days taking money out of the hands of the IRS and putting it into the ground and drilling American oil. So for me, that's kind of a serve all masters, all-encompassing job.
I love it. That's awesome. And we're very excited to be partnering with you guys. Before we get into it, we obviously should mention that, well, by the time you're listening to this, there will be a webinar tonight at 8 p.m. Eastern time. I believe you will be on it. I know Cole will. I'm not sure if you're on it as well. So we're very excited for that. So you can go to catanicapitalgroup.com and join the list. And we'll also put the registration link in the description of this podcast. So cool. So you're with King. Tell us what it is King does, so we have an idea there, and then we'll kind of get into the industry.
Sure. Yeah, we're an American oil company, so we are an explorer and driller. So what we do is we raise capital. We acquire leases to land after doing a lot of geological research. We find fruitful land. We lease it. We acquire it. We raise capital and drill and distribute earnings back to our investors every month with significant tax advantages. But the thing that we do differently than everyone else is you'll find a lot of oil and gas companies that are like promoters, is what we call them in the industry, where they're going to raise a small amount of money to drill 1, 2, maybe 3 wells. And essentially you get a tax write-off for the entry into the fund. You get paid for 20 or 30 years on the income that's derived from those 1 to 3 wells. But at the end of the day, the oil and gas company sells the leases. Our model is much different. So we include the value of the leases or the true assets in the fund with our investors. So for us, the thing that's different with us is we drill in multiple locations. We build portfolios of wells, and each and every one of our investors participates in the growth that happens, because every time you drill a well and drive revenue, it increases the value of your lease. So our investors really get to get into oil and gas with more of a multi-family type investment, where there is a tax advantage, monthly income, and a multiple on capital at the end.
I love that so much. And that's absolutely one of the biggest reasons that I did decide, to ultimately jump on with you guys is that exact reason, right? You look at these other opportunities out there, and again, not to take away from the other opportunities that are out there, because there are good opportunities across the industry, right? Other good operators, of course, just like in real estate, right? There's not just one good operator, but ultimately being a participant in all of the whole entire process. And also you guys do as much in-house as possible as well, which also like as well. A lot of these funds, you're finding kind of multiple operators and a lot of moving pieces, a lot of cooks in the kitchen, as I like to say, whereas you guys run a very efficient and lean operation, which is certainly something that I look for. So let's I'll have you do your best. Let's explain, I guess, the industry. What is it we're trying to accomplish here? What is it you guys are trying to accomplish? And what is it as investors that we should be looking for in terms of like what means things are going well, what can kind of go wrong?
Sure. Yeah. I mean, our goal and accomplishment is always to find a piece of land, secure it through a lease, drill it out, drive revenue, increase the lease, and sell it to a larger player. That's really where we fit in. We're very much a niche independent driller. So what we're doing is we're looking for large contiguous acre properties. So right now, I'll talk a little bit about our Borden County property, which is a unicorn. So we actually have almost 21,500 contiguous acres in the Permian Basin, in what's called the Eastern Shelf. This is a big plot of land. We've already drilled 5 wells there. The purpose of this, just so investors know, because it's confusing, the things that we do aren't necessarily always a direct result of revenue. So for the first 6 months of the property, we did a lot of geological work and due diligence for a future buyer. So every time we prove out, think of, we look for pay zones. Pay zones are like, think of a stack of pancakes upside down. That's what the surface of the earth looks like, a bunch of different layers. Some of those pancake layers have no oil, no gas. Some of them have a lot of both or each. We've actually found 6, and possibly by tomorrow, we'll know if we found a 7th pay zone in this property. There's 1 property owner, 1 mineral right owner. This is a piece of land that if it's proven to yield hydrocarbons, which we're doing already, this is something that, the big Exxons and large companies, they'll pay billions of dollars for. This one, maybe $1 billion. It's a little smaller, but we look for these pieces of property that are overlooked, that are outside the reach, a little bit of infrastructure, and we prove them up to extend the infrastructure. So if there's enough oil and gas coming out of a region, we'll extend pipelines and be able to get right into the pipeline business and grow the Permian Basin. So we're always looking to drill and explore and take hydrocarbons out of the ground in America for American companies. We're not an exporter. So we are supplying the energy independence of this nation. And most importantly to me is the fact that this investment that we provide people has a 3-pronged approach that you just can't find anywhere else. 100% tax write-off, monthly income, which is also tax advantaged, and a multiple on capital at the end. If and when we do our job appropriately, because of course the oil and gas business is a very difficult one. I love that you said that we run a lean operation. I don't think I've ever heard that phrase in oil and gas. It costs like, $100,000 just to ship water out of a location. Everything's really expensive, but it's also really profitable.
Yes. Well, by lean, I mean in terms of, trying not to have too many moving parts, but certainly yes. Expenses can be, a separate category there. Okay, awesome. So let's kind of dive into the industry, right? So obviously, and I'll just speak for myself, but I've talked to plenty of investors, and so many people think that you're just drilling down and there's this big underground lake of oil, right? But you keep saying the scientific term, which is hydrocarbons. So explain exactly what it is we're looking for when we search for hydrocarbons, what they are, and like ultimately what it leads to get us to a barrel of oil.
Sure. Yeah. The first and last point of reference when you're looking at a property is usually what's called 3D seismic. So this is a seismic overview of a piece of property that scans down far below the surface to determine hot and cold areas for where hydrocarbons may or may not be. I'll break one of the myths. We knew about 25 years ago where every pocket of oil and gas is, including the big one they found in Guyana. That was known about at least 25 years ago in 2 different research papers. It's just a matter of them now saying, hey, there's more oil. There's more than we thought, because since 1955, we've been told by Rockefeller and all these people, we were told we'd run out of oil by 1971, that there'd be no oil left for sure by 1990. All of these, it's well known where it's out there. So once we find a piece of land, geology helps you determine where to look. Engineering tells you how to get the hydrocarbons from underneath the surface. So we do two different types of approaches with this. We either drill vertical wells or horizontal wells. Like we were talking about offline, when you drill a vertical well, which is just what most people think of, you just drill a hole, stick a straw, and then all of a sudden, it's Beverly Hillbillies and we've got, bubbling crude coming everywhere. Those days are gone. All the surface oil has been extracted and used. That part is actually true. Excuse me. But when we're talking about drilling below the surface, you're generally going anywhere from 3,000 to 12,000 feet below the surface of the earth. So you're going a couple of miles below the surface in order to find these pockets of hydrocarbon, which are much larger. So when you drill a vertical well and it goes straight down to stick that straw in and suck it out, imagine a contact lens sitting on a desk. That's what a pocket of oil looks like, an upside down salad bowl. It's a bunch of ancient hydrocarbons where heat and pressure have pushed it up into a little pocket, which a little pocket is the size of a small lake on occasion. It's also the size of a small pond at times, just a matter of where you drill. But you want to drill right in the center and right on top and pull it out of the ground. That's kind of the old way of doing things. That's where you can, if you drill too deep, you just get water. If you drill too shallow, you get nothing. So that's kind of the old school, I guess, wildcatting type business. We're really in more involved in a mixture of vertical and horizontal wells. So modern drilling actually requires you go down into an L formation. So right now in our Permian Basin location, we're 17,000 feet deep and across. So we drilled down a little over 8,000 feet. We then curved the drill and we drilled out another almost 9,000 feet across. This allows us to go across a bunch of contact lenses at the same time and be able to pull them out all congruently. So two different ways to approach, drilling for oil and gas, but the most significant thing is to have the right type of pre-drilling geological research done and the right engineering plan. Those two things, by the way, the engineering plans change minute by minute as we get into the rock. Every layer, every pancake stack has a whole different rock structure and formation. So it's a very intricate, it's an interesting business. I'm kind of a science nerd. So I love learning as much as I can about how we drill and what we look for. But in general, that's pretty much what we do in the industry is we look for either vertical or horizontal opportunities. Horizontal produce more. They have a much higher effective rate. You're looking at 99% of the time you're drawing oil, but they are excessively much more expensive and they require a heck of a lot of more man hours, time, money, and energy.
Interesting. Okay. Awesome. Really appreciate that explanation. So this is truly, like, to put it into real estate terms again, a value add opportunity where you guys aren't trying to, just like if you bought a 200 unit fixer upper, right? You wouldn't go in and fix all 200 units, right? Then try to sell it. You basically maybe do, 150 or 120 and then, move it on to someone else. Same kind of concept here, right? You guys are basically trying to find it, prove it's there, obviously have production, but ultimately, like you said, extend that, that infrastructure. And this horizontal drilling is fascinating. So, and this is newer, I guess, relatively speaking, considering this industry's been around for hundreds of years. Is that right?
Yeah, horizontal began a little shy of 20 years ago, and that's where fracking came into play. So when you drill down, then you drill across, you frack different areas of the lateral to produce enough hydrocarbon and pressure flow upward. So yeah, relatively new. This is where fracking came in. Thankfully, in Borden County, we're drilling in what's called chert. It's a rock formation called Mississippian chert, and it's already porous. So fracking is probably another topic people would love to cover, which is one of those mythologies out there that I love to break, if you don't mind.
Yeah, please do. Break them all.
We hear, well, let me break one for you, that green energy is nothing more than a very sophisticated confidence scheme to convince you that the Earth's temperature is changing to, you're the same people who can't fix the pothole on the road here on Arapahoe in Dallas are the same people who are saying, if you give us more money, we'll fix the climate. Fix the pothole first. But this whole elaborate green energy scam all started with fracking in the Dakotas. That was really where the term came out. Is what all fracking is you're running water and sand and some very light chemicals through high pressure into deep crevices of the earth to create literally fractures, which is why it's called fracking, in rock formation, so that oil and gas seep into it and you can pull it up through the surface. To let you know a little bit about this, you can drink frack water. I always hear from the green people that, oh, fracking is so bad for the environment. Well, sand comes from the environment, water comes from the environment. The light chemicals you put in there are actually digestible. So that's where horizontal came into play, was the ability to hit multiple different pockets of oil along the same pathway. So in the long run, your average horizontal well saves you the equivalent of about 5 or 6 different vertical wells. So it is cost savings overall.
Wow.
Yeah, that's pretty much that's the way it works. Because when you find oil, it's never just one pocket. These are robust basins that are thousands of years old, and they're in multiple different areas. So what exploration teams started seeing is like, hey, we could run the rig down and across, and it would hit all of these different areas, which we planned on drilling vertically anyway. And the science behind it is pretty interesting. It's even more interesting to see the operation in play. I just got back from our wells in the Permian, and it's pretty fascinating. Pretty fascinating to see how these gigantic structures operate, and to see water and gas pouring out in just massive amounts. That people don't realize how much oil it actually takes to keep the country going, or how much oil it takes to make a gallon of gasoline. Seeing how much can actually be extracted from the surface in this country alone by itself is truly what will create freedom without any question. I mean, even Donald Trump in his interviews lately has said, how would you fix this economy? And his first answer is drill, baby, drill. And he's 100% correct.
Fascinating. I love it. Yeah. And obviously, you're seeing the top investors, right? Warren Buffett's getting involved, right? This is not going anywhere in the near future until the day that, a renewable energy source can be put out there, right? We need this, right? Even for your electric cars. And obviously that's another myth we can bust too, about how many barrels of oil it takes to get your electric car just to the lot where you buy it, right? Yep. Not that, and then to charge it, right? So obviously, we won't go too deep into that rabbit hole, but we could do a whole episode just on that, because in my research, I was absolutely mind blown about how many barrels of oil it takes even just to make those batteries. I was like, oh boy, wow, we're really saving the earth with these Teslas.
Well, I'll give you a quick, I do this on a podcast, so I do it very concisely. So your average electric battery, it takes between 600 and 800 barrels of oil. A barrel of oil in our industry is not a 55-gallon drum, they're 42-gallon drums. So it takes 600 to 800 42-gallon drums just to make the battery. Now, to mine the cobalt and lithium that you need, you have to move 250,000 tons of dirt in order to get to the cobalt and lithium, which is all powered by diesel vehicles. The average age of a miner of cobalt and lithium around the world is 13 years old, by the way. So it's done by child labor in foreign nations. And at the same time, to summarize it, by the time your car hits the lot, it's already emitted 13 years of combustion engine emissions by the time it actually hits the lot. It's called offsetting emissions. It's a very well-known science that people just overlook because they desire to drive. Teslas are nice, like it's great. Cole drives a Tesla. I always find it funny that a guy who's named after a hydrocarbon drives an electric car. I'm just going to say that, spelled differently, but his name is still Cole.
That's hilarious. I'm gonna razz him for that.
And then at the same time, when you're plugging into the grid is run primarily right now on coal energy. So you're using coal energy to refill the vehicle. Those emissions are 3x what it would be from an efficient combustion engine. I mean, I can go on and on and on. This is a gigantic confidence scam to raise taxes and impose undue tariffs on domestic energy companies for control of a nation. This is just obviously what's happening at this point. Wow,
that's incredible. Yeah, it's pretty fascinating for sure. But again, with all of these, it's a good time to be getting into the industry because, they're pushing harder for these, which means, ironically, we're going to need more oil and gas. So let's get into the economic side of this, this industry, which obviously I know you love. So we've talked about the process, getting the oil out. What is the process then to then get it to a barrel? And what are we trading and looking at? And what are we as investors hoping is happening in this process in terms of price and, kind of that whole procedure?
Sure. Yeah. So the goal, I guess the efficient way to say it is when we're drilling in a location, we're filling up bins, right? So we have these gigantic industrial bins that fill up with oil. Right now, we're in an area outside of infrastructure, so we're trucking everything out. So what happens is when we fill up a load, we actually call a trucking company. They come out and pump it into their trucks and meter it, and then take it to their brokers that take it to either a refinery or a storage facility. But on our side of the story, it doesn't really matter, right? They pay us usually 30 to 60 days after extraction, but we're trucking everything out right now in Borden County. Now in Wyoming, we're on a pipeline. So we just pump it, we drill it and it goes right into a pipeline. It gets metered, we get paid later. That's essentially how it works. Right now, they're opening up the Freeport in South Texas. That is a liquid natural gas exportation center. So it's going to allow domestic energy companies to actually profit where the government profits right now. Thankfully, we'll be able to participate in that, but it allows us to pipe liquid natural gas down into the Freeport, and then it gets put on boats, taken overseas, and sold overseas. So that's really kind of the exit strategy. I think it's important to note that when we have these kind of conversations before a webinar, is that there's multiple ways to invest in oil and gas. I just personally do it this way. I work here because of the way that we've structured our fund. So you can invest in stocks like Warren Buffett's doing, right? Occidental, gigantic company. Essentially, you're going to live and die on their profit and loss statement every quarter. You have no tax advantage for doing so. You're essentially just a stockholder. You have no say, no partnership. You're just investing in something that's extremely liquid, right? That's the real benefit. You can get in and out as quick as you like. You can also trade futures, which most people don't know how these things work, but this is an area I'm passionate about, so I'm going to walk through it.
Yeah.
Paper has been created on all commodities around the earth, right? The best example I can give you is gold and silver. So you can go on the stock exchange and you can buy gold and you can buy silver. What most people don't know is that for every piece of paper that you're buying, so when I buy a gold contract, right? For instance, I buy 100 ounces of gold equivalent on paper. That same bank has sold that same piece of paper to about 100 different people. And now they owe, if you actually redeemed it for gold or for oil or for any shipment, most of the time, it's kind of like a Ponzi scheme when you're trading papers, right? Like a big bulk of people will get their delivery. But if you look at gold and silver right now, the COMEX doesn't have anywhere near the amount of gold and silver that's owned on paper. Now, oil and gas is no different. There's gigantic trading companies that pretty much control the price of oil and gas based on the amount of paper that they trade. However, all that paper at the end of the day boils back into who actually has the commodities. So when you look at pricing, our pricing is, we're a bit of a victim of pricing. We can't control it in any possible way. That's controlled by, they say traders, but traders ultimately work for banks and banks ultimately work for governments. So
shout out to Enron.
Yeah, exactly. Yeah. That's when I started my financial career, by the way. It was when Enron and United collapsed, and Arthur Andersen.
Oh,
so,
wow.
Very familiar with that whole process. But it's very similar. So our goal, what we try to do is we try to drill as much oil as possible. That's a component because that creates income for our investors and profit for the company. But our real profit comes in the procurement of an economy of scale. So we're trying to, if you look back in the multifamily space, Imagine in multifamily, if you could just go out and buy 100,000 acres of land, right? That's about what we have. We have more than that in this property, in the multiple properties. 100,000 acres of land. Every time you drill an oil well that's producing, it's kind of like building an apartment complex that's filled with renters. So you have rent coming in. What happens to the surrounding land? It always increases in value, right? If there's renters and there's income, it's going to attract other businesses. Well, in oil and gas, it's the same way. You don't drill a well where there's only one pocket of oil. You drill where there's offsetting pockets surrounding. So every well that we drill, we create what's called a PUD, a proven undeveloped location. And every one of those PUDs is basically like laying a foundation for a new building to be built, for a new developer, or for us. So we're constantly building truly an economy of scale. So you could trade securities, you could trade futures, you could, if you really wanted to, you could go fill up trucks full of gasoline, sit on them and sell them at higher prices. A million ways you can get into. People do that, by the way. They do fill up 1,000 to 2,000 gallon containers, hold them in the market, and then sell them a year later when prices go up. There are people who make a fortune doing it. But in our case, it's pretty simple. Our investors, you get to reduce their adjusted gross income significantly through the investment. So right off the bat, you get about 30 to 40% of your investment back in tax savings. Then you get monthly passive income, which you do nothing for. It just comes from the sale of hydrocarbons. And then at the end of the day, you actually participate in what we project to be a 3.5x return on the total property. That could be more, it could be less. It's a projected return. But when I look at like I don't own a stock. The only stock I touch is I buy the VIX from every now and then when it drops down to 12, 13 bucks and I sell it at 17 or 18 and I get out.
Love the VIX.
But you could certainly buy through the stock market, but you'll pay full taxes on everything. If you make money on it, you'll pay 20% capital gains. The dividend checks are okay, but they're also fully taxable. In our environment, your investment lowers your income, your taxable income. It gives you a period of time of tax-free income on top of that. And then you have the multiple, which is what everyone invests for anyway. I want to make my money worth, 1, 2, 3, 4x what it was 3 or 5 years ago. So I look at where we're at as far as oil and gas investing as kind of being the pinnacle.
1000%. And I love that. You made so many great points. And that's the thing, right? As you look at some of the best investors, right? Obviously you have, Warren Buffett, right? He's a stock guy. And of course, right, more power to that. I'm a former stockbroker, right? Seen it plenty of times. One thing I'll tell you is you're not going to get rich from the stock market like you can when, like I'm making the point now, you go straight to the source, right? That is, you look at the best investors who have actually built wealth. What are they doing? Well, we talked about mining, cobalt mining and whatnot, and, whether you agree with or disagree, but they're going and buying the mines, right? Like that's what they want to own. That's where you get it. And so this is where you really get the wealth. And oh, by the way, there's all these tax incentives around it too. So, you're not only creating wealth, but you're preserving it, which is really the biggest thing. It's not about how much you make, it's about how much you keep, right? And that's the biggest thing is, if you got a high income job and you're making $500,000 a year, but you're getting that high tax bracket, you're not keeping much, right? So this gives you that tax advantage and, all of those opportunities. And oh, by the way, you get to participate in the exit too, which is, you said, forecasted for a 3.5x, which is just so incredible. So as we start to wind down here, let's kind of touch on, there's a lot happening, right? And if you're looking at mainstream media, you're like, why the heck would I invest in oil and gas? So we obviously killed a bunch of myths, but kind of kill some of these major headlines that we're seeing in terms of like, oil prices probably going to stay down, natural gas prices, staying down, kind of kill some of these and help us understand what really is most likely going to happen over the next, year and beyond.
Sure. Yeah. So, I mean, first of all, if you're watching the mainstream media for financial news, God bless you. You are on your own.
I talk about this all the time.
It is a coordinated effort. I don't know if people know this, but 6 companies own every major media corporation in the world. 6 companies. They all work together. Yeah. They all work with BlackRock and these other groups. Here's an interesting thing about BlackRock, who's the largest purveyor of ESG. That number one, they don't enforce ESG standards in China for their Chinese holdings, only for the American companies who are dumb enough to pay these fees to be considered environmentally safe. They're also the largest buyer of oil fields through their private equity group. So the same company that's telling you not to buy oil and gas is lowering the price and buying it from right out underneath you. So if we look at where we're going moving forward, you can look at the EIA, you can look at the international oil boards, and the same governments around the world are all coordinating with one another to tell the same story, except honestly, really in oil and gas. You have the IEIA, the EIA, international versus domestic. The EIA is essentially another Biden appointee. It's the government reports that we're seeing right now, to me, have the same validity as the jobs report, which I'll go through because we went through this offline. It's just fascinating to think that right now you're watching your friends and my friends get laid off from their jobs. I hear about at least one a week, somebody saying they're getting laid off or feel like they will, or it's coming. Yet we're hearing about all this great job creation. There is job creation, don't get me wrong. It's primarily service industry because people are traveling. You're seeing airports needing people and restaurants and hotels. These aren't the jobs that drive economic growth. They're the ones that sustain economic stability. That's all they do. So the lower income side, yeah, there's some job growth there. Most of them are just returning to work since the pandemic. That's the truth. But if you look at the BLS, the Bureau of Labor Statistics, they have actually beaten their own estimates 14 consecutive times in the jobs report. So again, every week, a friend of mine says they're getting laid off, got laid off, or think they'll get laid off. Yet jobs are growing exponentially per this administration, which has lied about literally everything, including, whose cocaine it was in the White House. I mean, we live in a fascinating
We'll
time.
never know.
Yeah.
We'll never know.
Who could it be? It's just fascinating to watch the soap opera unfold in front of us. But if you look at like the BLS beating their own estimates and Wall Street 14 consecutive times, the statistical analogy of this, like the statistical probability of the BLS beating their own numbers and Wall Street's numbers 14 consecutive times is a 1 in 16,000 chance. Of those 14 jobs reports, 12 of them have been adjusted down by hundreds of thousands of jobs 2 to 3 months later when no one's paying attention. Our GDP right now is completely overstated. If you look at the last 2 GDP reports, if you remove the government sale of liquid natural gas to Europe, natural gas costs $2.20 to $2.70 right now in America. They're selling it in Europe because their pipelines are being blown up in war. They're selling it overseas for $28 a unit. If you remove that piece of the GDP, we're a shrinking economy. So you can see they're suppressing the price here, selling it in Europe for a profit, and then calling that profit tremendous management of the economy. The economy and the markets are completely removed from one another. What's happening in the stock market right now is classic overinflation bubble building, but the economy itself is a different story. If you look at, everyone looks at the CPI, the inflation, consumer inflation index, look at the PPI. Look at the different benchmarks that exist that tell you what's happening in manufacturing and producing. We are shrinking at a rapid rate. That stock market, even for an oil and gas stock during an oil and gas boom, still much more of a risk than actually selling the commodity, pulling it out of the ground and selling it yourself with tax advantages. One thing I can tell you with certainty over the coming year is that because of the, think of our government, right? Like to me, I'm in this because I think that overtaxation, I'm trying to find biblically the difference between the United States today and the Jews in Judea at the time of Christ. There really isn't much of a difference. We're overtaxed, overoccupied, and overburdened. And if we look at that overtaxation and how it kills generational wealth, one of the most fascinating things is that for funding our own nation's energy independence, you get 100% write-off against AGI. Take that as your first year win. I don't know any other place in the world where people are paying 30 to 40% of their income to one company who's still $32 trillion in debt. Welcome to America. That's how it works.
Yeah.
So
insane.
I choose to opt out of that entire process myself. I am an investor in all of our funds. I choose to opt out of it myself and be able to take the tax benefits and the cash flow benefits of oil and gas, as opposed to giving my captor another paycheck. That's just kind of the way I see things. So I see taxes going up over the coming year. They have to cover the national debt. The price of oil and gas will certainly, at one point in time, people will realize that there isn't that much production coming out of the Middle East. All of these recent drops in production from OPEC and OPEC plus, they're just simply, no one's ever audited how much they actually produce. Like we talked about offline, I think we're looking at their reductions as an admission of guilt by saying, yeah, I know we say we produce X amount per day, but we actually don't have that type of reserve anymore. You're going to see a big movement of dollars and cash flow into the United States, which has the largest reserves in the world of the cleanest energy in the world. We will become, definitely not during this administration, but in the next administration, if we actually have fair elections and people elect the right people, we will see an energy independence in this country like you've never seen before. And right now is the best time to get in while prices are low, costs are low. The less rigs on the market is better opportunity for you. It's a pretty boring business, to be honest with you. We look for land, we drill holes, we pull stuff out of the ground and sell it on trucks or pipelines. But that is where, like you said, it's the source. That's where the money is made. And you have Warren Buffett, who is a great investor. I don't know if I'm a real big fan of the things he's done in his life, but he's a great investor. On the other hand, you have Robert Kiyosaki, who I buy into just about everything he talks about happening geopolitically. He is absolutely promoting invest in oil at the oil field level for the tax advantages and the income.
Yeah, 1000%. So many great points there. And we could do a whole episode around some of that stuff for sure. But yes, again, right, straight to the source, the tax advantages. This feels like, it's going to take off, right? And this is that opportunity to get in when things are really going right, because we've been kind of suppressed since COVID, right? Obviously, COVID had some extremely damaging effects to the industry. And I still feel like some of the dust hasn't been shaken off yet. And so, over these next 3 to 5 years, you're really going to see that happen. Obviously, especially if, certain administrations, make it in the next election, like you said, barring any kind of crazy, who really knows these electrical polls? I don't, we're not going to get into that now, but I know, I love it. No, I love it. I love it. And it's very important, right? Because these are the things, right? And you mentioned that, right? Ultimately it's boring, right? I mean, real estate's boring at the fundamental level too, right? I mean, buy an apartment complex, make it look nicer for someone to live in it, and then they pay you more money. That's literally it, but that's where the wealth is created. And so basically what I'm trying to say is, like, these are the things that matter, right? And it's important to pay attention to these things when you're getting, involved, right? Like, I talk to investors, I'm like, how much economics are you paying attention to? Because, it all is interconnected, right? And so it's important to understand that when you're looking at these media headlines, that it's not really what is happening, right? And ultimately what's really happening is, like you said, right? Middle East is actually probably running low. The US is really setting themselves up to be in a great position. And we have the opportunity to invest in that position, right? At the source, at the level, right? Not some middleman, not some piece of paper stock, right? At the source level, which is absolutely massive. And I'm with you. I absolutely subscribe to pretty much everything Robert Kiyosaki says. So when he speaks and he's, he pays attention to stuff. And so it's really, really important. So I love it. This has been absolutely incredible. One question I do have, which I should have asked way early on, and this is so elementary, but what is the difference between oil and natural gas?
Uses primarily. So it's one carbon. You're looking at one carbon change, one carbon atom change in between the two. But yeah, they're used for natural gas by itself. Natural gas should be around $6 to $7 per unit globally. Everything gets global pricing, but it also has regional pricing. Natural gas has been made a green energy in the UK and now in the state of Ohio, because none of the green energy is actually providing enough energy. So I think that natural gas will end up being the segue from fossil fuels, which is a ridiculous term. I'd be happy to do an entire episode on how that came about. But natural gas and petroleum have massively different uses. Most manufacturing facilities, about 68% of manufacturing facilities around the globe, use natural gas for power. You're seeing Bitcoin miners looking for natural gas because it's more efficient, it's cheaper. Part of the reason the natural gas pricing is this low is they're looking to phase out coal and electric grid power plants and replace it with natural gas because of the cleanliness, the less carbon emissions. But at the end of the day, plant a lot of trees. I mean, trees by nature suck carbon out of the air and release oxygen. It's pretty much God's solution to carbon emissions. So we stop doing that, stop chopping them down, start planting them. It does exactly the same job they want trillions of dollars to try to attempt to do. But natural gas and oil, big difference between the two. Petroleum is primarily used for energy sources for vehicles. It's more for transportation, is really where the staying power is with petroleum. But petroleum is used in everything from pharmaceutical, everything you're wearing and everything I can see on the screen behind you required or uses petroleum to make or to distribute. It is in everything, including the pills you take. The bonding agent is actually petroleum. People who vape nicotine, they're exhaling petroleum. It's in everything. It's in everything that we use right now.
Wow. Yeah, just more solidifying the desire to invest and why this is such an incredible opportunity, especially while prices are so low, kind of getting in at that sort of almost not entry level. Of course, this industry's been around forever, but like I said, it feels like it's been kind of artificially compressed, right? And at some point that levee has to break, as you mentioned before. So we're excited to be part of that. And again, we're very, very grateful. Eric, thank you so much for your time. This has been awesome. We are going to skip. Normally, I have a final five, but this is a kind of a special episode. We'll skip that for that. But one question to end here: what's the best way for people to get a hold of you? And if they want to learn more about the industry and everything, maybe outside of the investment opportunity, what's kind of the best way?
Sure. We can always reach us at kingoperating.com. That's the company. You can ask for Eric Rice. My email is erice@kingoperating.com. You can find me on LinkedIn, Eric Rice, pretty easy to find. I'm on Twitter, EA_Rice. I've got two podcasts coming out, one called The Rice Report, which will be on the King Operating YouTube. You can find it on YouTube and Rumble. I think we just opened the accounts for that. It'll launch next week. And then I have my own called Critical Rice Theory, which will also be on YouTube and Rumble.
Sweet. Awesome. We will link that in the show notes, make it super easy. Eric, again, thank you so much for your time. This was amazing. And I will see you soon. We'll be talking to you and hearing from you again very soon for the webinar. So thank you again. Again, you guys, that webinar registration link will be in the description of this podcast. Thank you, Eric.
You got it. Thank you so much.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to KataniCapitalGroup.com to learn more.